first unit is crypto basics. What are cryptocurrencies? What are blockchains? What are the different types of blockchain? What are the different types of crypto? And how can we use tokenomics to actually go and research cryptocurrencies? What are cryptos? They're just tokenized assets that represent value, not really much more than that. Not all cryptos are created equal though. There are better coins, better blockchains, more useful blockchains, and there are poor blockchains and low quality blockchains as well. In terms of barriers to entry, especially for us retail investors, there are very low barriers. You can sign up with an exchange, get trading straight away with very low fees. So that's definitely a positive for trading crypto over something like Forex or even stocks, 24/7 trading as well. There are different types of blockchain and cryptos that we can trade. You have blockchains that really focus on being a currency, which is just a ledger of transactions. That's all it is. So the main example there is Bitcoin. Litecoin is a fork of Bitcoin, and actually Dogecoin, I think, is a fork of Litecoin. So it's a fork of a fork. But essentially these blockchains do one thing only, and that is keep a ledger of people transacting. Now, stable coins are a little bit different. They are definitely used as a currency, but they're not usually their own blockchain. They're usually built on a different type of blockchain known as a smart contracts blockchain. So the main one there is Ethereum. This blockchain is different to Bitcoin. Whereas Bitcoin is simply a ledger of transactions, Ethereum allows people to actually enter into contracts on the blockchain, which means you can have a lot more uses on that blockchain. You can actually issue different types of tokens on Ethereum. So you might want to go and trade, let's say Uniswap, which is a token. That's actually an Ethereum-based token. These are known as ERC20 tokens. So it's good to know the differences, because when you're investing in cryptocurrencies, you've really got to know what you're investing in. Are you investing in a main blockchain? Are you investing in a different type of token? So these are the main smart contracts blockchains right now. They are very different to the currency type blockchains. Now, these are the types of cryptocurrency. What do you want to trade? What do you want to invest in? Where do you want to focus your resources? Do you want to trade currency tokens? Really here, this is like trading gold or something like that, where there's not much value apart from the value that people actually think it's worth. But then you have different types of tokens like exchange tokens. So a lot of exchanges like Binance and KuCoin will have their own tokens, so you can trade those. Different type of value proposition. You also have protocol tokens. Injective protocol is a good one. So that code actually does something specific and they have their own token. It's going to be a very different investment proposition than something like a currency token. DeFi tokens are really popular. Utility tokens could have many different uses on a blockchain and can be very important over time. You even have stock tokens, which is a way of trading the value of a stock, but with a cryptocurrency. Definitely some positives of doing that overall. And then you have NFTs, which are totally different. So all of the cryptocurrencies that you'll trade will be known as fungible tokens, the same as fiat currency. If I gave you $1 and someone else gave you $1, those dollars are the same. You can swap them around and give them back to someone else, and they are all the same, or otherwise known as fungible. Non-fungible tokens are completely different. They are like art. There's only one Picasso painting of each certain type. There is only one unique piece of art that a person makes, and so that is non-fungible. It cannot be swapped around, and that is what NFTs do as well. NFTs are a completely different value proposition and investment as well. It's like investing in art. NFTs can be used for a lot of different things though. And then we come to shitcoins and scams. Obviously, there are a lot of these and you want to steer clear of those. All right, so what is tokenomics? Tokenomics obviously is a mix of tokens and economics. We can look at the value of a cryptocurrency, the supply of it, which is super important. If it has an unlimited supply, is that going to affect the investment over the long term? If it has a very limited supply, then if a lot of people want to buy it, the price might rocket up. The volume in terms of the trade, daily, weekly, monthly, how much is the project worth? So each cryptocurrency is a piece of a wider investment. So Bitcoin has a certain amount of coins and you add all those up and then that gives you the market cap. Also, who holds that crypto? That's also super important because cryptos are really here for investors to invest, but also for projects and companies to raise money. Who's invested in it? That's obviously important to know. Burning tokens is also super important. If a company burns tokens, it literally takes them out of circulation. And if you have the same demand and fewer coins, then the price should appreciate. And then we come to one of the main reasons of a cryptocurrency, especially these days, is ICOs and IDOs, or basically initial coin offerings, initial DEX offerings, essentially just a way for the project to issue cryptocurrencies to earn money and investment so they can build their project. Let's go over to CoinGecko.com, which is a very popular site for the cryptocurrency space. And we can do some really easy tokenomics right now. Let's look at Bitcoin. Here's the price, $55,290 right now. So cryptocurrencies are valued in dollars because everyone knows what dollars are and they can easily compare it to other investments. It's the world's reserve currency. Everything is valued in dollars, so it makes sense. So this is the price of one cryptocurrency right here. And then we have the 1 hour, 24 hour, and 7-day change in terms of the percentage price changes. 24-hour volume. This is all of the trading volume in Bitcoin over the last day, made up of all the different exchanges that do trade Bitcoin. It's given as a US dollar value. So $72 billion worth of Bitcoin was traded over the last 24 hours. Then we have the market capitalization, which is a very easy calculation to do. You take the price of each coin and you times it by the amount of coins in existence, and that gives you the total value of those coins. In the case of Bitcoin, this is $1 trillion more or less. Let's click into Bitcoin and we can do some more tokenomics. We can come and have a look at the market cap rank, super important. We can also go and look at the website if you want to know more about the project. Every site will have docs and you can go and read those. Also on the right hand side, you have the tokenomics again, and really important when looking at cryptocurrencies is the circulating supply and the max supply. So right now we can see that Bitcoin is nearing the limit of its supply. Once there are 21 million coins that have been made, that's it. There will be no more. And so we're getting very close to that. It's going to be a good few years from making this video until we reach that supply cap. But one of the main reasons that Bitcoin is where it is because of a limited supply and a high demand, meaning a high price. That is really very basic tokenomics though, so you can really quickly compare projects very quickly. But if you want to go deep, then you have to go to the project's website and have a look at their docs. So you can see all this information can be found in the project docs. That will be on the project's website. As an example, Solana right here, we can see the token supply distribution. This means we can see who is holding it. Seed sale, 16%. Founding sale, 13%. So founding sale is very early investors. If this is very high, are those founding investors going to sell out when the price goes up? Maybe they'll lock in some profits. So when are they actually going to sell? A lot of the time, founders will actually have a time limit. So maybe they'll have to hold on for 2 years. But once that expires, are they going to dump all their coins on the market? That could obviously put pressure on the price. So it's very good to know these things. You also have how much the team has. So the team itself that developed it has 13%, and then the community has 40%. So you can compare these distributions from one project to the next. Let's recap Unit 1 though. Cryptos are tokenized assets. That's all they are. They represent value and they are a digital representation of that. There are many types of blockchain and tokens for different use. NFTs are unique and not fungible. Cryptos are fungible. Each and every token, each and every project is very different. The tokenomics are different, so we have to know them before we start getting invested. Before we get into Unit 2, here are the best crypto news sites and info sites and how to do your own research. I've listed them here. You can go and look at them. I think these are really great and full of information and will definitely give you a lot of very good knowledge about cryptocurrencies. Let's get into the basics of trading cryptos then. And if you're getting value this far, make sure you are subscribed and also like this video. But I'm going to go through what a currency pair is. So when we're trading cryptos, we have to trade in a currency pair. Also, what is a stable coin? Super important for beginners to really understand what these are. A base versus a quote currency, really important when you're trading. And then trading currency pairs in general. Okay, so what is a currency pair? When you trade cryptocurrencies, when you trade currencies in general, when you trade Forex, you have to trade in a pair. If you want to buy something, you of course have to sell something in return. Now, when you go into a shop, you've got all the prices there already, and the thing you're giving the shopkeeper is a fiat currency, usually, let's say US dollars. When you're buying a currency though, you have to give them a different currency. It's exactly like swapping your money at a money exchange when you're on holiday. So we are exchanging two currencies, and this is how you will see them right here. So we've got BTC/USDT. What does that mean? Well, each crypto has a ticker. So BTC is Bitcoin, and then /USDT. USDT is called US dollar tether. It's a very popular cryptocurrency and a very useful crypto. I'll get into what a stable coin is and US dollar tether in a second. This is how we read a currency pair. You have BTC against US dollar tether. ETH is Ethereum, so Ethereum against US dollar Tether. So you know this trading pair is Ethereum and US dollar Tether. And then you have other currency pairs like Bitcoin, Ethereum. So if you just want to trade them directly, you can trade Bitcoin and Ethereum. This is how it will look. We need to get into stable coins though, because these are the entry into the crypto space and they're also used to trade against every other crypto. So a stable coin is a crypto version of a fiat currency. It is always a crypto version of a real asset. So it doesn't have to be a fiat currency. There are other stable coins that are backed by other very stable real assets, maybe like gold, but it is definitely backed by a real world asset. And that's why it's called stable coin. Its price is pegged to that real world asset. So let's take US dollar